so you're one, okay, and you are Miss Lee, right?
Yeah.
Okay, all right, so, go ahead.
Hello everyone, welcome to our presentation. And this is Group H, and they are my group member. And let me introduce the two companies. Let me introduce the two companies we will cover. The first one is Bristol Myers Squibb, referred to BMS. And this company based in New York City. And in the 1989, the Bristol Myers merged Squibb, and after that the company's name changed the Bristol Myers Squibb, and after that the BMS was become the second largest pharmaceutical company, and the company refers to the company's missions to discover and develop and deliver the innovative medicines that helps patients lower the serious diseases. And the BMS is trading on the New York Stock. It's trading on the New York Stock Exchange. And the second is Sanofi. This is the French company established in 1973, and they are the world's fifth largest company in the former stakeholder, and it also it includes the central nervous system and the diabetes, and also internal medicine. And this company has been listed on the NYSE as SNY. Now next is my team member, and she's gonna introduce the financial and market.
Okay, so now I'm gonna have a brief description of the key financial metrics of BMS company. First, we're gonna look at the stock price as 55.50 per share on February 1st, 2017. And from the graph, this is the stock price over the whole year. We can see there is a huge decline around August 2016, which is due to the failure of their cancer study. And this has challenged their leading position in the healthcare industry. But the good news is Wall Street has a positive valuation on their future financials, and the company has already worked hard on strengthening their product portfolios by acquisition and deals. And then we're gonna look at their revenues and networks. And their revenues and net income is kind of smooth over the 3 years, although there is a decrease around 2014. And this is mainly the result of their product called Optical, and other products performed worse due to the competitive market, because there are a lot of products in the HCV market, and their products lack of innovative and didn't really stand out. But we're pretty confident that if our company focus more on the product called Optical, there is going to be an accelerated growth of net income and revenue in the next few quarters. And sorry, back one side. I didn't know why it's not shown here, probably behind the picture, but now I'm going to talk about the EPS and PE ratios. They're pretty high, like the PE ratio is 70.8, and they are really standing out in the market and also in the whole industry. So this is kind of like a competitive advantage over the whole market, and the whole concern that we are having is whether the company can keep this competitive advantage, because they are having a high dividend rate of 2.67%, and it is very hard for them to for us to keep it around the next few years. And now I have my teammate Jessica to present it.
Yeah, so hello. So now I'm going to talk about like the key financial risks, like the metrics of Sanofi. So as we can see here from this diagram, the Sanofi stock price declined like significantly in October, but that's because of the FDA's delayed approval of their medicine called Gizimi. So but we can see like in November, its stock price bounced up back to like this normal stock price, like around $42.5 per share, because of FDA says it's okay, like they can sell their no diabetes drugs. I think it's called Solic, and it was believed could become the next like bestsellers of diabetes drugs. So the next slide, I'm going to talk about Sanofi's revenue and net income. So if there's one word I would like to use to describe the overall situation of this revenue and net income, I will use the word like fluctuate. Because as we can see here, its revenue increased from 2014 to 2015, but it declined from 2015 to 2016 by maybe 100 million euros, like that. But also like its net income, even though its net income decreased from 2014 to 2015, but it's like increased again from 2015 to 2016 due to like the cost savings issues. So like that, it have lots of effort in like smaller maybe office spaces and maybe smaller like retail sections like that. So it achieved like the net income increase. But yeah, it's not a good news, because it's not the net income increase is not because of like they have better sales or whatever, but it's because of their like effort on cost saving issues. So the next I'm going to talk about the earnings per share of Sanofi and also the P/E ratios of Sanofi. As we can see here, there's earnings per share is like 3.42. It's not a bad earnings per share, even though it's not also really good if you compare with other maybe drug companies. But its P/E ratio actually is really good. It's higher than industrial average 20.20. So that's all for my part. And next, my colleague Savannah will introduce you the company comparative of the two companies.
Okay, let's take a look at the comparison of these two companies. I'm going to break it down into those five financial metrics. So even though Sanofi trade at a lower stock price, but let's look at the revenues, like almost more than double compared to Bristol Myers Squibb. And from equity investor point of view, they have to pay more for the price in terms of the dollar earning, but the net income is way more than BMS. So let's look at a company solely from equity investor point of view. So the EPS is better, and which means they have so Sanofi is more able to provide a long-term strategic return for the investors. Our takeaway from the research is Sanofi's been doing so much for the research and product development. They spend a lot of capital into their those innovations. So for Bristol Myers Squibb, we highly recommend they would do the same thing, put more capital into research and development, as well as capital expenditures, in order to continue the product renovation, as well as keep the relevance to the current market in order to be stand out for the very competitive pharmaceutical industry. That's all presented by Group H. Any questions? Concerns?
Questions, comments? Okay.
introduce BMY. I don't think you need to introduce BMY to, because you're talking to your CEO. Your CEO already knows his company. So I think that slide is unnecessary.
I totally agree. Like in the beginning, we put I think like the point of view we stand kind of like overall, you know, to not just present to CEO, but like every shareholders probably.
But it said that in the exercise and it's
Yes,
to the
yes,
CEO.
that will definitely improve a lot and do a lot of changes for next.
Yeah, yeah,
Yes.
yeah.
Yeah.
So based on what you listed on the Sanofi, I think the standard performance in overall, especially the net income, which is indicating their profit, they are so profitable. However, their stock prices, you mentioned a lot of stock price change, but regarding to the market, last year's market, and regarding to the comparison of other, you don't have to go back there. I just say their company stock is just staying there. It's basically not changing a lot. I wonder, are you planning to like explain why with such a good performance they are not the market is not going to rate it based on that, and the market their stock price is not even changing regarding to that, because with such you can say the profit rate is extremely high. I wonder how could that happen? In reality, some company has almost 20% profit with such big revenue. That would be the most hot company for investments.
So your question is like you think like Sanofi's profit have really high like profit rate, right? And you want us to like answer your question like why Sanofi can stay such a profitable.
I'm questioning the number has something special we need to explain about, because usually if some company is performing at this level, the stock price should not be falling down, and the people should not get into negative expectations based on your previous slides, because based on this chart, the
Yeah.
company is doing very well in the previous slides, and also the stock price they're not rated so well. So I wonder maybe the net income came with something else. Maybe their investments, not their drug sales, or something that you can explain. At least maybe there might be an investigation that might be necessary for that.
Okay, yeah. So that is because like if you look at the overall picture of Sanofi's business, because it have operations in America, in Asia, in Europe, because it has business over like worldwide. So the overall, like I think even though like United States contribute maybe 11.3% growth to its net income growth overall, like I mean overall, but for Asia part it doesn't do so well. Like it declined a little bit, even like especially for China, like because people like expect like China will like keep growing in the future, but it's not. So yeah, I think maybe that's why people don't really look well into Sanofi's future.
So this number is only for U.S. market.
No, it's like overall. So it's like I feel like it's like all about people's expectation for
Okay, I got it.
Sanofi's future.
So
Yeah.
basically you're saying that people, although it's performing well now, people are expecting it's going downslide.
Yeah, in the future.
Okay,
Yeah.
maybe you should mention that in the
Okay, yeah,
previous
definitely.
slides,
Yeah, yeah.
because that is contradicting
Yeah.
to what you listed here.
Yeah, sure.
Right, right, yeah.
I think just can put a little bit more content on the very last slide, instead of just based on numbers you already provided previously, like why the company is financially stronger, like in the statement.
Thank you.
Okay, so hold on. Okay, anyone else have something to say? Or observation, question? So, okay, I would say, when you were introduced, that's okay. You looked at the slide a lot, and you should know the slide so that you're talking to me and then you might refer to it, but it's always about referring to a slide. And remember, this is for everybody. The audience is the CEO and the top level, executives. That's your audience of Bristol Myers. So therefore, you don't have to educate